You think we should be higher than we are right now in terms of interest rates, don't you?
I do, Joe. And also, this is esoteric, but the fact the Fed's paying above market rates on excess bank reserves is very dangerous. It creates the opportunity for the Fed to expand the basic money supply, but it not turn into loans. It ends up moving capital to the government instead of private enterprise, and I think that's not a healthy. So I'd get rid of that whole phenomenon if I were in charge, but I don't think the Fed's ready to do that.
Where are you on the trade war? You probably would you be the butting heads with the president on this as well?
I would be. I'm a free trade guy now. To the degree that he's arguing he's going to get better agreements, that's an argument. But fundamentally, I believe in free trade, and I think it's been phenomenally good for the United States and phenomenally good for the world. Okay. We only trade because we get better.
What we've made, would you say, is it fair to say that we've made some strides rolling back some regulations that went too far in the banking sector, and what else do you expect to hear tomorrow?
Well, I think we've made some progress. Part of it's been legislative. Most of it has been how the regulators actually regulate. Unfortunately, we don't have rule of law in the U.S. We have rule of regulators. The Congress passes these pretty broad-ranging laws, and it gives a wide range for how they're interpreted. And the regulators had really tightened down right after the financial crisis. And since Trump has been elected, they've let up a lot, and that's been very healthy for the economy and very healthy for the banking industry. I hope we'll see some more legislative moves. I'm a big advocate that the way to really manage the industry properly is to require a strong capital position and then let banks innovate and let them take different kinds of risk, because I think that one individual bank making mistakes is not what we need to be worried about. Some banks should be failing. What we don't want is systematic failure, and systematic failure is almost always correlated with very weak capital positions.
John, what's your take on how financials are trading? I mean, we're in a very good economy by all accounts. Business confidence is high, consumer confidence is very high, small business optimism is at records, and yet bank share performance has been dismal this calendar year. What do you think is behind that?
That's a really interesting question to me, because the banking industry overall is doing very well. I think there's a question in some people's mind of what the technological implications are for the industry. Can non-bank competitors that have much less regulation, even though banking regulation has gotten better, are they going to take a large part of the industry's business? And also, I think there's concern about the implication for rising interest rates. I do think the better banks are prepared and actually will benefit from rising rates, but I think the market is concerned about, will rising rates be detrimental for the industry?